Good afternoon, everyone. And I'm sure all of you who have ever attended our webinars would exactly know what I'm going to say because these are all repetitive slides. But it's a customary slide which we will obviously talk every time. So just a quick introduction about myself. I'm Jayant Kohli, founder and CEO of Lawbit, and about Lawbit, we are India's leading regulatory technology company, primarily focusing on building global compliance management solution, wherein our team of lawyers, company secretaries, they are scanning through all the laws and regulations in India and globally, and creating a very comprehensive, the most intelligence library of regulatory compliances in the world. And we have so far worked in 70 plus countries. In India, our coverage is quite comprehensive. As we speak, we have covered more than 2,350 laws from and created, curated more than 65,000 compliances out of 1 million plus pages of law from more than 1 lakh 10,000 legal documents. And we've been in this industry for law. We just completed 7 years. Recently, while I'm personally in this industry for more than 13 years now, and a team of 105 lawyers and company secretaries and tech professionals today are working behind the scene to bring the solution for you. We are serving more than 550. We're serving more than 550 enterprises to bring the varied one. We are serving more than 550 plus entities globally. 15,000 plus users are using the technology. And apart from GCMS, we also offer solutions like legal matter management, which helps you manage your litigations, notices from a single dashboard, enterprise risk management, which companies are using to manage their risk and controls, ERMs, or interfinancial, financial controls as well. And as well, we offer compliance health checks, compliance audits, and other advisory services, which helps organization be better compliant with all the laws and regulations of the land. That's a quick introduction about ourselves, and I know while I was talking, I already know what I'm going to talk next because you must have attended it earlier as well. So once again, a warm welcome to this 30th webinar in the series, and just to talk about the team, which is behind the scene working in bringing these webinars for you. They have been tirelessly working every month to figure out what are the next topic they need to they need to start working on. What is the topic which industry is really looking forward to listen, scan through the possible speakers who can come, speak to them, convince them to spare the time. Because when we are working on any webinar, it takes a lot of time and effort to even first finalize the topic agenda. There are a lot of interactions which goes behind it, and the team has ensured that in the last 13 months there's not been a single month when we have missed it. So it's a monthly series which is going on. So thank you so much for being a part of this today. Now let me start with a quick introduction about our speakers. We have Mr. Sachin Gupta with us. Sachin is Vice President of Finance with Invest India. Sachin is a seasoned chartered accountant and senior finance professional with almost 20 years, 2 decades of experience of working in India and globally as well in UAE and US. He has, he's currently serving with Invest India, as I mentioned to you, where he's responsible for financial strategy, planning, procurement, which is an additional responsibility, which is also ensuring and ensuring compliances with the regulations, with all the tech direct and indirect tech regulations. Sachin has worked with in the past with NSDC, Tech Mahindra, and V Customer Group, and he has also been involved in automation. And when I speak to Sachin, very interestingly, I don't want to Sachin. I want to also say that I see a lot of interest in Sachin in knowing and talking about the technology, his understanding about technology, and specifically the GST there in the interaction, whatever we have with Sachin. I see a lot of passion in him talking about very realistic situations which while sitting on the on in investing, which I would say you are today such a representing the face of government to us on
Thanks, Jen.
some in some ways, but you really understand the pain of the industry. What as the industry we would require, and what our exact pains are. And I look forward to listen to your thoughts and maybe some insight which would help us uh, know the other side of the story as well. Thank you, Sachin, for being on this panel today. Look forward to hearing. And also, I have with me Mr. Anupam Vasdani. He is a Group Chief Financial Officer, CFO of with BalanceHero Group, which is a Korean-based group. And Anupam also has more than 20 years of experience, diversified into NBFCs, fintech. He is, I think, NBFC fintech is something Anupam been associated for a long time. He has previously worked with Toyota Financial Services, and where he also has been, part of leading a multi-billion rupee fundraise for the group, for the company, for the institution at that point of time. Anupam, I want to also mention while interacting with you when we were preparing this deck and the presentation, your composure, calm, and your deeper understanding of the situations and the requirement, not just in the financial service sector, but across other sectors also is quite interesting. And I look forward to hearing your thoughts and which can also help our viewers today to understand some of the real challenges and maybe what practical situations, or solutions which you advises you have for them. Thank you for your time and look forward to listening to you, Anupam.
Sure.
Jen, and thanks so much for your kind words. Thanks very much.
Thank you.
Thanks, Jen, for inviting us to speak on the GST reforms. This is definitely one of the most talked about topic right now. With so many new changes happening across the country. Thanks for giving the opportunity to speak on this matter. Thanks, Jen.
Thank you, Sachin. So, you know, uh, while I would say GST 2.0 is not a new word to anyone. That's that from the day government coined the word GST 2.0, I think everybody has been talking. On the lighter note, we were also talking as uh, from Arnab Goswami to Shireen Ban to and any news anchor you would have. They have all given their expert comments on the GST 2.0. So there is enough, unlike other topics which we would have done webinars in the past. This is one very widely discussed topic. We all know racialization, all that has happened. But here we would also try to understand, not just from the consumer side of point of view, but we'll also try and understand from an industry standpoint. What is it for the industry? What challenges, in practical challenges, after the GST 2.0 has been rolled out? What industry is facing, and what are the various options, tools in front of which are in their hands. We will speak about it. But before that, we'll start with the intent, highlight implication of this GST 2.0, and in the towards the end, we will also try and address some of the Q&A questions which we have received from our participants today. Actually, let's move next. So, Sachin and Anupam, while I'll just take up this slide, but I definitely want to hear your thoughts, on this also. So, you know, if I talk about GST 2.0, what was the intent? Why is it required right now? Because from the time GST was introduced, I think there have been a lot of uh, discussions on GST. The rates are high. This is happening. But why this is the chosen time? Why government waited for so many years and never thought of changing those slabs and rates? And why is it right now? What definitely more from a micro, not a micro, but on a macroeconomics standpoint, what I believe, because the way trade wars are happening right now in the world, the way the economics is, scenarios are changing across the world. The India as an economy has to become a consumption driven economy.
Hmm.
If we have to keep our economies healthy, because we cannot just rely on export. We have to consume. And the best part of us as an economy is our population. While we always say the population is a problem also, but at the same time, from an economic and consumption point of view, that's a strength which we have. So we have to put levers and give more disposable income in the hands of the user, where he would be able to spend more. And when this, because it's a circular economy today, I buy a bike, it goes behind multiple other companies will get impacted, and the same money will revolve in around their economy and impact other, other sectors also. So in this scenario, government has to really think about uh, putting more disposable income in the hands of the user. They started with reduce the income tax rates, and the obvious next step was reduce the GST. Uh, and they have rationalized the rates. They have simplified the indirect tax structures. They have focused on doing ease of doing business, because at the same this time, while we are talking about uh, lesser rate, but government is also not just looking at lesser rate, but they're also looking at how we can make it more easy and business friendly. So which means GSTAT being operationalized, and their government is also looking at reducing the litigations with the industry and making it simpler for the industry, so that they can attract more foreign investors to come and invest in India or open up their offices in India. I think primarily one of the sector which government is very bullish about is GCC, the service sector, which they would want. So one side is the production manufacturing based economy, which in internal economies, which they companies which they want to push, and they want to attract more investment, primarily in GCC and other sectors as well. So consumer, as I mentioned, is at the heart of this growth story, because more the disposable income, lower expenses, and more you know the better the economic wheels can rotate. So Anupam, just that's what my understanding is, and want to hear your thoughts. Uh, what do you think is the intent, and why the timing right now?
No, I think, Jet, absolutely. Timing couldn't have been more apt than this. I mean, we had seen that in the last couple of quarters. Clearly, the economy was struggling. Uh, Consumption has been the bedrock of the Indian economy. It's the main engine. We'd seen the slowdown happening. Urban consumption was struggling. We'd seen this in terms of the volumes of sales of the FMCG, the autos as an industry was struggling. So clearly, I think there couldn't have been a better time. Also, besides the local consumption challenge we are facing in India, we were also facing very strong and significant macro headwinds in the form of the tariff wars, right? And even though initially we believed that India may be kind of away given our close relationship with the US, but unfortunately, the way the things turned out, India was one of the most impacted countries under the tariff wars. Uh, and in that sense, I think this is a very rightly timed step, and the intention was very clear. I mean, a lot of I would give kudos to the GST Council. The industry had been asking for a major upheaval of the GST regime since its introduction in 2017. I mean, there were changes, but a comprehensive relook at the GST regime was becoming necessary. So in that sense, it's really a comprehensive reforms. I mean, there were multiple 30 plus circulars we have seen being issued in the short span of these 22 days. Uh, I think the other thing is that there was a very big need, as you also covered, with respect to simplification, right? And this is in the spirit of the ease of doing business, which our central government has been working, along with, of course, support from the state governments also. It was needed that we simplify this regime in the sense of registration, right? Especially for the MSME sector, especially for our again the large employee. That's the largest sector in terms of the employment. Uh, Export units were struggling because of the tariff wars. So I think this, in the spirit of the ease of doing business, was necessary. There was a need to provide support to the falling consumption story, and of course, from a larger perspective, that ultimately we have to reach to our our target and milestone of becoming a $5 trillion and ultimately Viksit Bharat. So these kinds of reforms are necessary. And I would say this is a very comprehensive set of reform in that sense, Jen.
Thanks, Anupam. Sachin, what's your thoughts?
Thanks, Jen. Uh, so let me give you a brief background about the implementation of the GST in the 2017 from the government perspective. So when in 2017, when it was implemented for the first time, it was the huge change for the nation that time. Irrespective of so many ifs and buts received from the various stakeholders that time. For the first time in the India merged many different indirect taxes like service tax, value-added tax, excise into the one single tax, which is called the GST. This made the system very simpler and helped the government to collect taxes in the better way. Implementation of GST in 2017 not only simplified the tax structure, but also improved the compliance parameter on which the industry is prevailing and become one of the largest source of revenue for the government. To monitor this progress, GST Council has also been created. They often meet to review and update the GST matter, GST challenges created by the industry, created by the consumers. Several notifications and circulars have been amended time to time to take care of this. But this 56 meeting was special because it brought the most of the important changes so far. It made tax rates simpler, rules easier, and the whole process much smoother. Considering the requests received from various of the industries, various of the stakeholders attached to it, so GST2 reforms marks a bold step towards building a simpler, fair, and the future-ready tax system. Uh, there was some kind economic stability was there. Like as Anupam rightly said, there were some economic issues over there in case of the consumption parameter and other parameters. So that is one of the parameters to bring out the GST reforms. It is not just about the rate cut or the compliance upgrade. It's about the reducing the tax burden on ordinary citizen as well, which is our farmer, which is our industry, our youth, especially middle class families, or to whom the benefit of GST cuts has been given in the nature of the essential goods. So, in short, this reform lays the foundation for the inclusive growth, which is one of the factors for the growth of the nation, stronger fiscal flexibility, and in a more competitive India on the global stage. And I must say, this is one of the stone which we had laid down for the approach of going into a Viksit Bharat 2047. At the last, I would say the guiding principle of GST should be trust the citizen first, enforce only where the accountability fails. So this is one of the steps forward for the Viksit Bharat 2047. We are seeking so many changes in the GST reform in terms of the rate rationalization, in terms of the one of the important aspects which they had given to us, which have been waited, industry waited this, consumer is awaiting this from the last 7 years. That is the formation of the GST appellate tribunal, which is one of the important move of the government to provide relief to the consumers of the stakeholder of the GST in line with the users of the income tax, because it was not there. So many issues, so many cases are pending with the High Court, and the GST becomes a bottleneck for the operational perspective for the industry as well as for the consumer itself. Because earlier, if we see, so giving this practical view, so earlier we see the life-saving drugs, the medicine, year by year they become the costly and is the out of the approach of the common people. Okay, getting them, either they have to go for the subsidy, either they have to go for something like that, discount parameter, they have to do something, or farmers are not getting the right compensation in the form of this. Household is becoming is facing challenges in managing their household stuffs with the limited inflation rates like 5 to 6%. To control the inflation, to reaches the more taxes to the for the further consumption, to stabilize the industry for the Viksit Bharat. All this put together, the GST reforms had been come is in a major step which government is bring down to curb all these challenges. And thanks everybody, so that we would have the implementation of these two in a very simpler and stable manner that we would foresee in the upcoming plan. Thanks, Chair.
Right. Now let's move to the, those aspects now which which are important for the industry to look at. So I'll rather invite both of you to, have to share your views on this particular slides, about rate rationalization. I'm interested to obviously understand the structural reforms and, what the trade facilitation measures government is taking. So Anupam, if you can uh, hear your thoughts on the rationalizations and to start with.
Right. So Jayant, this was one of the very important demand which we were clearly we have been hearing about this from across the industries, also from consumer. It was when it was launched, the GST regime, if you remember, there was a lot of clamor and confusion about so many kind of rate structures, right? I mean, very unusual because other countries which had implemented GST before India normally had a few structures. Of course, it was a necessity. Sachin covered that we were moving from a very complex set of state-wise or VAT regime and excise regime to this simplified. It was necessary, but I think with the stabilization of reforms, with the compliances kind of becoming stronger and the government building its own intelligence, etc., around this, it was necessary to move towards simplification, towards simplification. I think in that sense, having the lesser category of rates was very important. So I think what's happened now is we have done away with the slabs of 12 and 28%. So essentially, it's become a two slab structure, very simple. We have the standard rate of 18%. 5% is a merit rate for the goods which are essential from a consumer point of view, which the government wants to promote. And of course, then we have this the sin or the luxury goods rate at 40%. So I think in that way, it's a big reform from a simplification perspective. Obviously, this reduces the disputes from the business point of view. The rate harmonization also kind of corrects the inverted duty structures. I mean, still there are certain pending issues, but to a large extent, a lot of inverted duty structures and the ITC getting stuck because of these, the government has tried to address. The other thing which I would want to pick up is which Sachin also covered is GST 80. For any tax regime to be stable, there has to be an appellate tribunal. And I think in that sense, frankly, this has got delayed. There was always a provision, but implementation of the appellate tribunal became delayed. It was also leading to a lot of litigations getting pending, getting in a pendency with various courts and very cumbersome from a business point of view because you want certain things to come from appellate level itself, tribunal level itself. So I think in that sense, I think thankfully it's not just been announced, but also the implementation is being done at a very fast pace. November, I think end of November, we will have the start of this principal bench in Delhi. And then, of course, we're going to cover all these states. So hopefully it's going to be well covered in terms of the reach across all states. I think the other thing is the refund simplification against, right? I mean, refund simplification we saw, and surprisingly, when the government was always focusing on the promoting the exports, despite that, we had seen that a lot of refunds were getting stuck, right, because of the operational bottlenecks, because of the interpretation by the authorities over the various notifications, etc. So I think in that sense also. The change really helps, right? I mean, the simplification which is brought in terms of clarity, in terms of reducing the inverted duty structures, rate harmonization across the entire value chain. And of course, the other thing is that if you look at it from the, and I think we should talk about this in detail as we go across, about certain sectors, right, which were struggling because of the specific problems in sectors. For example, you spoke about GCC, right? GCC is again becoming a very important sector, and we had the challenges linked to the intermediary supply there, right? Which is again a big welcome step by the government. Our ITAs, GCC was struggling because of the procedural bottleneck, the interpretation issues there. So I think in that sense also it's a very welcoming step, Jayant.
Right, that allows the industry to also invest that money back because a couple of months also of cash flow addition can really help, uh, specifically the SME sector, MSME sector in industry because which works on the cash flow basis. Yeah, that's very helpful. All right. So let's look at the macro picture of the rate rationalization because Anupam, I want to your thoughts also. But what I understand, the main focus of the rate rationalization has been the manufacturing setup. With the uh,
Right.
FMCG, automobiles, which are primarily the consumer-driven sectors here, so that the consumption story can become better. And definitely, one couple of things which impact the end user are the FMCG and the automobiles. Uh, and we'll talk about other key sectors also in the coming slides. Uh, your thoughts on this?
Right. So the impact is already visible, Jan. We saw that for the sales volume for this Diwali was all-time high. Year-on-year growth is about 30%, 6 lakh crores exceeding. And FMCG, automobile, they are very large sectors in terms of both from the in terms of the output they produce, also in terms of the employment opportunities they create. And I think in that sense, the start has been very strong. All of us are hoping that this is not just one time, but it sustains, and the consumption story, which was a bit of a struggling in the couple of last quarters, picks up with this. It becomes the igniting force, and then from there, the consumption really picks up. The simplest way is, of course, that you do the hurt consumer as less as possible from the tax rates, and that's why you have seen 12 and 18% ultimately from a FMCG sector point of view moving to 5%. Auto also, except the luxury cars and the SUVs, it's everything has moved to the 18%, which is a big change again from that point of view. I think that now there are certain nuances, right, which will still be there from an industry point of view, which are we'll have to see. For example, the inverted duty structure story, right? Are there any in the value chains, any remaining challenges from an inverted duty structure, and what the government is going to be doing about the refunds? There could be some technical challenges there, right? Because it's not clear whether because of the rate change, the refunds on the inverted duty structure or the accumulation of the ITC which is happening is going to be processed, or there's going to be any interpretational issues about it. So I think the business have to be clear. Uh, uh, and for both these sectors, FMCG as especially automobile, I think one uh, uh, challenging thing which has been resolved is the issue with respect to the discounts, right? Post-sale discounts. So again, interpretational issues around it, right? I mean, only if you have to claim that discount, which is post-sales, automobile, right? Dealer are sitting with huge amount of inventory, and to liquidate, you come up with offers and promotion schemes from time to time. And the discounts are very common, right? Norms in the auto industry. But what could be adjusted as a post-sale discount was always debated. It was litigated. But now, with the change in the GST Act, it's been clearly brought out that it is acceptable, and as well as some minor conditions are still there. But broadly, we would say that as long as those conditions are being met, the post-sale discounts will be accepted, and the benefit should be given there through the business. So I think in that sense, it's a big change. Allowing this, the intention of the government is very clear and strong there, in my view, on that.
Right. Sachin, anything want to add something?
Yeah, hi. Most of the things have rightly been said by you and the Anupam as well. So the most of the rate rationalization has done in the for the consumer perspective, basically to boost up the economy, basically to promote the Make in India programs like that. This one. So, for example, FMG sector, most of the things which are of the householding nature, the rates has been slashed out just to give some comfort to the consumer as well as the industry in the perspective of the improved working capital and FMG company. As rightly said by the Anupam, there is an issue with the ITD, but that has also been taken care by the government in form of the based on 90% of the refund calculation one, this which they are planning to implement from the November or December month. Government is working very hard on this so that there should not be any working capital issue to the industry as well. and the system to be continue as is continue in the free arena as well. Regarding the benefit to the industry, so government is making the most of the things like policy clarification. So many FAQ has been clarified and issued, so that each and every clarification to be given to the industry. They are holding the industry in the government is holding the industry in terms of providing the proper training and a communication. If you see the system enablement, so GST team is parallelly working on the system analysis, bringing out the reform from 1 to 2 and making this sustainable. If we are talking about the comparison with any industry, so it's not an easy task, but government is parallelly working on it and make sure that that same should be implemented as soon as possible, so that there should not be any issue for the industry as well as the customer. From the customer's perspective, government is also working in the terms of the appointing and the monitoring agency, which is ruling the which has already been marked out 50 or 60 items, and just making in a handhold whether the rates has been passed to the customer or not, what challenges industry is facing, talking to the industry on each and every aspect, talking to the customer whether they are getting this money on these 50 products or not. Again, holding customer, creating the customer call center so that customer may approach to the government in case if any particularly benefits have not been passed. Similarly, appointing in a monitoring agency. So all these things which government has already been clear out is to support the industry in the customer, because something a system has to be go on. Industry and customer both are important for the government, so that we would achieve our goal for a developed nation. So that's called this. For example, few of the things which a government has bring out, like in the automotive sector, the pharma sector, that by keeping in the mind the middle class family, basically the pharma sectors. Like I said in the beginning itself, most of the drugs are so costly that the normal person cannot afford. Like in today's scenario, cancer is one of the spreading disease. But the medicine, once you purchase out, so I've saw there is a couple of injection which is costly for 4 lakh rupees. So ultimately that 18% goes, which is giving 72 lakh upright benefit to the customer. So 33 medicine is 0% GST by the government, which is curable for the cancer basically. So if I'll compare that one injection, 72,000 upright saving for a day for a customer. And so many things have been there. So this is already a good move. The rate rationalization is very much required for the boosting of the economy, for the both the fund, and government will be helping from the industry as well and the customer as well. So that's it. Thanks. Thanks.
Just one point to be added, I think there, since we're talking about the automobile sector, again, I think the spirit has been very positive. But I think in terms of the let's say inconsequential or unintended impacts could be there. For example, compensation cess, right? I mean, compensation cess, which was levied on certain categories of automobiles, and we have the dealers on which the compensation cess has got accumulated sitting on the credit ledger. What happens to that? Because now you don't have the compensation cess. So can you really take the refund? It's not right. I mean, and that's a big accumulation, right, at a national level. So I think there, and I think these are certain transitional challenges, and we are hoping that the council will look into this in their upcoming meet and would address, because as we said that it's all been in the right spirit. These are some of the factors which are some of the issues which are remaining, and I think hopefully it will be taken up rightly in the upcoming meeting then.
Anupam, what is the compensation cess? So basically, it is a cess which have been introduced in 2017 to compensate the state when the VAT has been taken over by them to the at the national level. So then there is an arrangement which happened between the central and the government, central and the state government, that we would be paying you the compensation cess with an increment of 14% and something, and that is being levied on few of the things like sin goods, luxury goods, and something like that. And the deadline for them was this 2022, because this was the arrangement of the 5 years. But somehow during the lockdown, so government has to make so much loss in the GST portion, so that the recovery of the compensation says which was planned earlier when the time of the communication made to the state was not appropriate, because of which the government is short of collecting the compensation and making the payment to the state. However, having said that, compensation shares is totally abolished on the automobile. The only except for the tobacco and one, and it is being remained in exist till the time the loan which government has taken during the COVID period for the compensation part does not get spared off. However, for the automobile sector, that has already been completely erased off. So no compensation is levied. Now the question is how the dealer is going to recover that compensation. That is something which is in under discussion, whether should be in a form of passing to the customer or maybe it's in a totally write off to them. So that is something which may be taken in a further way of discussion.
Right. No, you're absolutely right, Sachin. So accumulated compensation cess in the credit ledgers of the, let's say, in this case, automobile dealers is the question. And as it's a pretty big amount, right? So 2,500 crore total accumulated at national level.
Agreed.
And I think the current regime does not allow the compensation cess to be kind of nullified with the outward liability, right? I mean, you have to match GST with GST and compensation cess. I mean, in that sense. So yes, I think again the intention has been great, positive, but I think some of these issues the government will have to, the council will have to come back clearly of how to kind of address those.
Probably what dealer has to do. So in case if there's nothing, so probably what dealer has to do, they have to recover the compensation cess in the form of the recovery from the customer only, while passing of the 10% benefit to the customer, a portion of it 2 or 3% compensation of the unsold inventory. I'm talking about the unsold inventory. So instead of passing of the 10% directly cut, 7 to 8% pass to the customer and 2%, something that is to be taken care by the industry, customer as well as the government. So probably we all are working on the parameter. Let's bring out what would happen to the future in the future.
Yeah, just quickly want to touch on this. Any specific thoughts which you have on while I would say renewable sector is definitely a very specific ones. Any specific thoughts which you have on the impacts of these changes on the service sector?
So service sector is one. Sorry, Anupam.
No, go ahead, Sachin. Please, after you, please go ahead.
So service sector is one of the major contributor for the GST Act, for the GST revenue to the government. Okay. What would happen? Like I said in the previous slide, so service sector like IT, ITS, they had made a major reform in the form of the omission of the intermediary service. That is one of the biggest reform in the service sector which had been given. The second one is the health and insurance policy, wherein the GST has lowered down to 0%. And the customer is now hoping that they may get the entire person benefit. Now the customer has to also to understand the industry challenge. When it becomes in a 0%, the cost of service would inflate to them. So ultimately, the passing of the benefit, the cost of services which is given to the customer will become a more costly. Ultimately, the passing of the benefit would be the 7 to 8%. That is something. But apart from this, the services like regular service like gym, fitness, hospitality, wellness, the GST has been stretched from 18 to 5%, which is a good move. Then again, GST 80 at appellate tribunal implemented. That is a major boost for the service provider in terms of IT, ITS sectors and all. Now, Anupam.
In my view, one of the practical challenges which business will have to counter is to meet the customer expectations of this rate cut, right? As a layman, as a normal consumer, you will expect that the price will come down to that extent. But because of, let's say, the inverted duty structure which may arise, right? We are talking about some of the sectors which are getting the input tax rate benefit earlier. Sorry, I'm audible, right?
Yes, you are.
Yes. So no, I was mentioning that it's about meeting the expectations of the consumer, because they may normally expect, right, that whatever is the cut, the prices of that particular goods or service is going to fall to that level. But in reality, if there's any kind of inverted duty structure which is getting created, let's say you have certain stocks of your inventories where you are carrying the rates in the previous regime which were higher, you may not be able to pass. So I think it's about communication, and it's going to be a bit challenging, but that's where I think the business may have to do a communication, and it may be a transitional challenge, hopefully, that when they're doing this change in the services sector, if there's any loss or the margin compressions because of the reduction in the rates, the passing may not be 100%. So I think that's where a little bit of the business will have to deal with the consumer expectation and the price reductions.
So I think this is going to be more interesting, very interesting, because this is one thing which has been a lot politicized also, especially talking about the insurance, the GST on insurance. How do companies communicate it back to the consumer? I think that's an interesting thing to see. Let's look at it. Okay, now we've spoken about good things about GST 2.0, but from an industry standpoint, there are also it brings certain kind of a challenges. One definitely on a very high level, I feel as our what happened with the GST initially, or our systems were not geared up for the change. All the systems were not geared up. We took a lot of the industry took a lot of time for making those changes. What are the challenges? What Anupam you're saying and Sachin you're saying on those on the system level, contractual realignment, because sometimes you do a fixed cost contracts, how those things are going to change. And again, as we spoke about, there are many places where the supply has already the goods have already been supplied on the previous rates. How are they going to factor in for? So looking for your thoughts on the challenges and any advices, any thoughts for the industry, how we can mitigate.
I think as finance professional, this is where the nuts and bolts lie. So I think transitional challenges are going to be significant, and I'm sure all finance professionals, finance teams, tax teams, etc., right now, including the IT team also, because they're the ones who are going to be ultimately implementing, are going to have very challenging times. I mean, or they've already had, some of them have already hopefully done this. Because there are a lot of changes. Changes were very swiftly done, and there are a couple of changes, right? So I think otherwise, normally we get to these changes will happen over a period of time, or there are one or two. But this is because this sheer number of changes are huge. Our systems need to be geared up. Now, as long as we have some of the larger, I mean, the stable ERPs, or let's say where we have the ERPs where it's easy to change, will be relatively easy. But if we are working on some of the systems which are legacy systems and are multi-tiered, the challenges are going to be practical, and it's not going to be solved easily. Done in the right spirit again, but I think finance team will have to deal with these struggles. The other thing is that very careful consideration on the business planning, because as we discussed earlier, it's not going to be simple reduction in terms of to the consumer prices, right? In terms of your sales prices, it's going to be about, you look at your margin compressions which happen because of any kind of inverted duty structure which get created. Your working capital cycles may get a little challenged depending on which sector, what kind of accumulation you have, etc. And on top of all this, while you're doing the changes, because the government has been very openly and candidly talking about that they're going to be watching, so it's not going to be in that sense a very easy and very relaxed environment, because they are very clear about profiteering, which should not happen intentionally or unintentionally, right? I mean, it may also create a reputational risk, because as we said, the consumer will expect a clear-cut kind of reduction there. So transitional challenges are significant, in my opinion, and relatively smaller businesses will have some time more to solve all those Jayant and Sachin, in my opinion.
So, how are you coping up with your, with the ERPs and your POS system? So in your business, and maybe not the POS, but I'm saying it's ERPs or your GST filing system which you're using. What kind of changes you've brought in?
So Jen, as you know that I'm from the financial services in fintech NBFC. Thankfully for our sector, in that way, there was no big change. So I was, in that sense, we didn't have to go through that pain point of changes. Of course, on several of our supplies which we use as a business, those ITCs were changed. The rates were changed, and I think from our system point of view, because we were not struggling on the outward side, but more of the kind of your inward supplies. So I think we were able to manage it better because you are only then talking about your payable system basically, which needs to be accustomed and tuned there. But I think if you're in multiple sectors and if you're both sides hits, then you are more significantly impacted, I think.
Okay. Yeah, Sachin, you were saying something here.
So, Jayant and Anupam, though I do agree that there are some transitional challenges persist, but hopefully we have to take the fact that every new changes comes with the challenges itself. Nothing has been prepared and to be served on the it's something like that. So if we saw the time of the 2017 when it is firstly implemented, there are so much challenges in adoption of the system, in understanding, in matching of the VAT with the service, then customer. That has already been taken care of in a period of 2 years. Government is always being helpful and extended support to the industry and everyone. Government has given a 1.5 years as a transitional phase to so that the inputs in the VAT and the service tax and the GST to cope up in the new GST factor. So I do agree these are the transitional challenges, but government is hand holding with all the industry leaders, with the customers, with the ministerial stakeholders to figure out what are the big challenges which need to be curbed out immediately, in which what will take time to mitigate in the time to come. So we are parallelly working on it. Let's see how these need to be curbed out or how these to be mitigated. But having said that, every new changes comes with the challenges, and be the stakeholder of that challenges, we need to mix our strategy. So how to it can be avoided, how it can be implemented in a better way. So somehow, still there are some openness remain in the GST reform. So we may foresee a new GST reforms in the coming year. So that all things need to be in the discussion phase. Let's see, figure out after 3 or 4 months, is it the actual challenges or it is something which have been uh, uh, nominated or being written over here only. So that the picture to be clear in the after a down time of 3 to 4 months. So till then we have to work on this to phasing it out. Let's see how do we do it. That's matter.
So, Sachin, are you hinting at Sachin? Are you hint? So, any word coming from you? I'm taking there is an insight toward it. So, are you hinting at there is something like a GST 2.1, 2.2? I'm not saying
No, no,
GST
no.
2 3.0 because
No, no. I'm not mentioning out that there should be another reform to be in, but what I'm mentioning out that there is always a challenge. Everybody has to work out being a stakeholder to the nation. Then again, a parallel exercise to be done. And what are the exact challenges which can be ruled out with the some of the notification circulars? So if you see in the first notification up to the 56, there are 54 notification have been out. So all the challenges have been ruled listed over there. New notification, new circular. That is a regular phenomena when GST Council meet out representation from the industry, from the customer side, from the other stakeholder side came in. Then a new notification, new circular is always always a new things which have to be implemented as a go basis. So this is something transitional challenges. I hope this is there. Okay. Now, as you mentioned out to the Anupam, how you managing out the system. So like in system, apart from the system, I must say the mindset of the people working in the finance department is to be changed out by doing the regular training, by updating them about the GST circular. So, for example, I'll take in a practical example. So, I'm talking about the practical one. So, cab services, there are two rates has been defined. One, if it's charging 5%, no input is available. You have to go for the RCM. One is it is charging for 12%. You will go for the input. So, this is the thing which system cannot handle. With a person who is booking the entry, who is basically working on that parameter need to be adopted by way of training, by way of reading out the act on all these things. So the change is required with each and every person who is attached to the nation, who is the stakeholder of the GST, not with few of the stakeholders who are sitting as an upper level of the GST parameters. So this is something it will end. Transitional challenges are there, but we are there to mitigate. We all, industry, customer, we all are there to mitigate those challenges in the years to come, in the months to come.
So what I'm with the takeaway I'm saying I'm hearing from you is there is there's somebody who's listening to the consumers' concerns, and we should expect some ease off in the months and days to come. Uh, okay, thank you. I think this was helpful. Well, I think we've spoken a lot about it. Uh, already in the discussions. Sachin, any you want to highlight on any of the specific issues here on the consequential impacts? Uh, we spoke about compensation cess. We already spoken about the credit loss. Uh, any specific thoughts which you have on state incentives, recalibration, or maybe anything else?
I think most of the point we have already talked this. Most of the things.
Right. Anupam, anything you want to add? Otherwise, we can move.
My pick is anti-profiteering. Be careful. My advice in anti-profiting, government has been very clearly saying. I think we need to be careful, and I think very important that we have well documentation of the possible suppression of the margins, to demonstrate that it is not done because of the profiteering, but because of how the business has shaped up post the implementation of the reforms. And for that, I think we need to have very clear documentation and evidence that this is happening because of that. The government has been mentioning very clearly they'll be watchful of this. So even though the anti-profiteering entire mechanism has been diluted a couple of quarters back, I think to 2024 it was implemented. Now it's of course by the Competition Commission of India. But since there's been a lot of talk about it openly, I would advise that the businesses need to be well documented and clear about how they're going to navigating this challenge.
So apart from this,
And
they had also. Apart from this,
sorry,
government
Sachin.
has also. Sorry, again. So apart from this,
No, no, please,
government has
please.
also created an call center customer helpline wherein the customer may also log in a complaint if the benefit is not passed. So anti-profiteering, very industry has to become very cautious about these things. So ultimately, having said that, this is something where the industry has to work back on the pricing methodology. So everything needs to be considered in the picture, what the input is they are getting, what they are not getting. So ultimately impacting of the pricing strategy again. So that parameter need to be relooked from the bottom of the things.
But sir, one specific thought, and I'm talking about specifically the FMCG sector. When initial days itself, we heard government is watchful that they want people, the industry to reduce prices and not increase the package size to make the same prices. But again, there were operational challenges because a 5 rupee का packet cannot become a 4.5 rupee का packet. वो 50 पैसे तो मुझे वापस मिलेंगे नहीं. So is that some kind of a relaxation, or that's again a challenge for the industry that they have to necessarily show a price reduction and not uh, address those realistic challenges? Maybe Sachin, your thoughts, is that
So this is something which need to be retested again. At this stage, we cannot comment it because ultimately what would happen? So what is the message given to the industries basically in the common parlance is either they have to revise the price or they have to increase the quantity of the biscuit. So as you rightly mentioned out Parle packet, if it is 100 grams, either they have to increase it 100 by 5 into 4 point, something like that. They have to increase the, but this is practically not possible because for making those changes, they have to break down the entire basic things. For example, the size of the packet, which is auto-populated, the machinery has also been implemented. The manufacturing unit, the manufacturing implementation plan. Uh, for a minor change, everything has needs to be adjusted accordingly. So it would be a very cost exercise for industry. But how they are going to be taken in the future way, that is need to be realized in months to come. Apart from this, there is a cases of 1 rupee shampoo or 2 rupee shampoo packet. If biscuit mein, if you will increase by 10 or 100 gram, that would be possible. But how you increase a 2 ml in shampoo such a 1 rupee or this is something which need to be a cautious discussion with the by the industry to the ministry itself. But that should be taken in the months to come. Let's say what are the practical challenges they are facing.
okay? Understood.
Unresolved challenges, as I rightly mentioned in the previous things, it's always been there. Okay. Whenever a new things come, so the people generally find out what was the unresolved challenges. But this is something which has been written down over here. Whether it's on a practical challenge or not is a not challenge. That to be taken care when actual implementation happen, and we would reach out 3 to 4 months after this implementation goes over. So that practically becomes an unresolved challenge. Till then, there is, so for example, e-way bill issues. So one of the things which we are getting from most of the things is whether the e-way bill issued before the 22nd September is valid or not. So they have to read it very carefully. It is rightly mentioned now. Any rate changes for any supply or any sales after 22 need to be changes. So even if it is being generated before this 22nd of the cutoff date, the goods have already been in the transition, there is no need to change. So there is only a implementation and understanding of the act to be given. So most of the challenge would be resolved therein. Rest of that will be taken into the next things forward to the ministry basically. Anupam, your thoughts on this parameter?
Since also the last slide and we've exceeded time, I will just say great set of reforms, really appreciable and very wide ranging, super balanced because taking care of the consumer, taking care of the businesses, and promoting the growth. I think, but as we say sometimes that dil mange more. Of course, we can have GST 3 reform, GST 4. So I think there are still certain challenges which we'll have to see. And the other thing is how does the implementation happens finally, right? I mean, ultimately we'll see on the ground, do we really as businesses, do we really see the ease of business happening? Is the mindset of the tax guys changing? That's very important thing to be watched. If I have to pick one issue, secondment issue, as an MNC enterprises, I think all of us are aware when we have MNCs, we have who are set of people who come and work with us from various countries because of the expertise they have, because of the knowledge, skills they have. It's becoming a very big issue because of the Supreme Court judgment. It's very well known in the industry, another operating. And I hope that the government takes a view and they bring some change in the act around it. Because so far they're saying it's coming more from an interpretation of the Supreme Court. So I would really want that, considering that we are becoming a GCC center of the world, right? And we have not becoming, but we are. I think issues like such, which are remaining issues, are sometimes not quite right. I hope that's why my pick is secondment issue, and I hope that in the next set of reform we see something coming in on the act side in this issue. Jayant, back to you, please.
Yeah, thank you. So I think we have reached the end of this discussion. Just want to quickly pick up a couple of queries which we have received from the users. While I think we have already touched upon many of them. Uh, Partly, Sachin, I want to ask you this first question, passing on GST benefit to the end customer. What are the practical again legality of it? While I think we discussed partly on on the last slide. Any other comment you want to add here?
Because legally, government has already been saying that the margins, the whatever the cut, needs to be passed to the customer. However, practically, it is somehow I also feel that it is difficult for the industry to take. So I'll take an example of the television TV. So generally, that GST on the television has been dropped from 28% to the 18%. Now, as per the GST 2 reform 2, now the industry is required to pass those benefit in every TV sold after 22nd to be given to the customer with an 18% GST. But the practical problem is the inventory they have that is already been, they had charged the input cost at the 18% and the 28% they are discharged based on the point of taxation rules. They have already discharged the GST as well. So because once the manufacturer OEM has selling off to the dealers, so they have to discharge the liability at the point of sales. Now there is a PV that dealer has purchased it at 28%. Now dealer how he can discharge it the 18%. So that is a practically challenge with them. And On top of it, the anti-profiting rules are there and other things are there. The government are also close monitoring it. So that may be a challenge how they are passing it to this. So this is something require a deep down how the project alignment to be done. Is the rightly 10% directly to be passed to customer or a portion to be passed down for the unsold inventory. So these are remains the open issues that need to be taken care. Anupam, your thoughts on this, please?
Sorry, I'm sorry about it. So no, if I
No.
would pick up one from one of these, because again, as Jen mentioned, limitation of time. Quickly, right? My take on, I'll pick a few. Possibility of IDs refund due to GST rate reduction. I personally see not big chance. Clearly in the FAQ, it was mentioned that as long as the rates are same, this is not going to be happening. So I don't see that the council will go back on what something which they've stated clearly. It's going to be difficult unless, of course, there are very pressing needs which the industry has to put up. But I see it's going to be a difficult case. And will the e-bills will have to be cancelled and generated fresh on grounds? Not necessarily e-bills. It depends on the case to case, as we very well know, right? So it's when on the date on which you generate the invoice, on the date when the goods are being delivered. So there are considerations. We'll have to look at each case. But the general answer is no. If there's something in transit, and because the rates have changed, not necessarily the e-bills have to be cancelled and generated fresh, because that will whole defy the purpose of the e-bill itself in that case. But whether the what needs to be done, whether the new rate is applicable on the goods in transit or the old, I think those are the case by case. We'll have to look at various permutation combinations and then see what is the final results on this. And case by case, we have to decide on that.
So thank you so much, Anupam, and thank you so much, Sachin. Uh, as I think we've been talking, this is one subject we can run a 3-year course on, uh, possibly. Still, it'll not be enough. Ideas for this today's webinar was to, in fact, touch upon the important areas. Sometimes put some thoughts in people's mind as to if they had not understood those queries, because while there is no straight answer for every industry, uh, having understanding and knowing the queries, knowing the questions also is important, so that we can go back and find an answer for ourselves and ensure that we are on the right side of the compliance required from the government perspective. I think this was quite interesting discussion today. But one last question to both of you. Yeah, since you've known the Indian market and the global market, is this GST 2.0 bringing us closer to and making it more to what the developed economies tech structures are, and is it going to make us more? Is it in a way making us more competitive as an economy?
My take would be yes. As I said, it's very comprehensive reforms. It made the spirit of ease of doing business, should provide us boost to the consumption, to the economy. And I think we have to reach there. It's a series of steps that you have to take as a country, as businesses, as industries to reach there. It's a big mile. It's a big, let's say, target, which the leaders of the country have set. And I think it's a step in that direction. It's a significant step. So I'll give a thumbs up to what has been achieved through these reforms.
Great, thank you. Sachin, your thought.
My thoughts is to Jen, if the reform, this GST 2 reform is not a revenue loss. It's a redistributive measure aiming to boost growth in inclusion. Inclusion in the form of the customer inclusion, industry inclusion, and everybody stakeholders for the Viksit Bharat 2047. Industry must act as a partner in the implementation, ensuring smooth transition in the genuine benefit transmission to the consumer, so that there should not be any ambiguity what is holding the benefit of GST to what extent. So the passing of benefit to the customer is also one of the requirement from the industry perspective. And again, GST 2 is not the end of the reform. It's the foundation for the next decade of India's economic transformation. And the direction is clear from the government. Simplification over complexity and the growth over compliance burden. That is the direction from the government for making the GST 2 reform. And
Right.
let's work towards and support government for achieving the milestone of the Viksit Bharat 2047 which is a dream for all of us at the last.
Right. No, that's very rightly said, and I think I keep repeating in my all my other webinars. I think this is the time. All the reforms in the regulatory landscape and now the tax landscape also are focused on uh, making us as an economy more robust, more competitive, and as I see, uh, the government's efforts are towards making business doing or rather making business easy in India from the point of ease of doing business in business perspective. I think we are moving in the right direction. I'm quite bullish and quite positive with these changes also. Thank you so much, Sachin, and thank you so much, Anupam, for taking out your time, not just today, but over days. Again, as I said, this is one of the most the complex topic. Even agreeing on
Yeah, I do agree.
what to cover, what not to cover was also a challenge. But your thoughts, your views have been quite appreciative, and we I hope that has been helpful for our viewers today. And I look forward to engaging with you on other topics also as we move along. Thank you so much.
Then thanks for having us. It's been a great opportunity, and coming on this forum and expressing our views there. The audience have been very patiently listening to us, so thanks to them, and thanks for being a wonderful host, and thanks to your team for putting this hard work of gathering the necessary information and putting the necessary things for in a easier way so that the audience can understand and see this message in a clear way. Thanks very much for that.
Pleasure.
Thank Jayant and the Lawrbit team for giving us the opportunity to speak over here on the most uh, highly topic as of today in the India. And secondly, thanks to take care of the compliance in the module, which is very easy to you. I'm one of the users of that module and giving the regular updates from the compliance tool to just monitor out the how the compliances of work in the our industry parameters and as well as in our entity. And thanks to every listener and who has joined us. Thanks a lot.